Good afternoon, everybody. Today we are going to be focusing on a big drop in the mega cap stocks on trading the close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And holy cow, what a reversal in some of these big names. We're going to go over those charts, but it all started this morning with the CPI data, which came in better than expected. The markets initially were up, and then we saw a rotation of capital. This is something I've actually talked about to members before, how you were going to see as the likelihood of rate cuts starts to increase, and now we're actually pricing in 2 to 3 into year end. Small caps will do better, and money will rotate out of the mega caps and go into those smaller names. You saw some nice gains in some small caps. The Russell today surging, I think, close to 3%, which is a huge move for the Russell, while the NASDAQ was down about 2% on the day. So let's take a look at some of this data here as we go into it. Here, look at that. Look at this map, guys. How often have we seen this red over here in the mega caps? Not very often over the last, heck, 6 months even. But that is what we have. To Apple down 2%, Nvidia down 4.4%, Microsoft down 2.4% right there. So this is some big action. But look at the difference today. Red in the big areas here, and look at all the green over here. It is almost like the inverse day today. So what do we have? The Dow is eking out a beautiful gain today, up 85 points. And go look at that, right? So the Dow is rocking today. Remember, the Dow has stocks like McDonald's in it. It has other names like that are kind of old trusty, but not the sexy names that have been running lately like Apple and Nvidia. And that's why it's doing so well today. The NASDAQ down 1.73% currently, or 323 points. The S&P down 40 points. The oil trade today actually getting a little bit of legs, maybe a little rotation of money into oil as well, but still below that key level. Gold today, a monster move, up $43, and Bitcoin still stuck right in the same range, down about $280 on the day. So let's take a look at some of these charts and let's go through them. We're going to start here with the S&P 500. Now again, it was initially an update early, right? So we started out the day with a little bit of a gain early here, a little bit of an uptick, and then we saw a topping tail. And by the way, we have this new scanner that we're using in the live day trading room, the Apex live day trading room. It will be up for anyone out there, I think, a week from next Monday. It's an amazing tool, but it highlights, it literally pinpoints all the trade signals that we need. Topping tail, time count, you name it, boom, boom, boom. Tells us exactly what's going on. Pretty exciting that we're going to be debuting that pretty soon. But my point is that you have a topping tail right here. Topping tail alert. That's a bearish reversal signal, and oh man, was it a bearish reversal signal. The S&P 500 coming crashing down. I want to show you something, guys. This is the beauty of technical analysis. So you got the topping tail, right? That's a bearish signal right there. But also, where did you go? Where did the market stall its fall and go sideways the rest of the day? Look at the gap fill from basically the previous day to yesterday. It was right there. Draw that line right across, and look at the lows where the market stalled. Gap fills are awesome in terms of technical support and resistance, and you can see right there, filled the gap and then actually held. Now, to be honest, what type of pattern is this starting to form? What type of pattern is this, guys? Bear flag, right? In spirit of bear flag. So you have your bear flag, look. So what does this tell me? It tells me that the selling is not done yet. Now listen, could we get a small bounce? Yeah, but as long as this pattern holds somewhere in this vicinity, it likely will head lower, maybe as early as tomorrow. Now, tomorrow we get the PPI data out at 8:30 a.m., so we got today's CPI data, which is Consumer Price Index, and then tomorrow morning we get PPI, which is Producer Price Index. PPI is the inflation that producers of goods are seeing versus what you and I see when we go to the store. Okay, so that will be a key catalyst as well. We'll watch and see what happens there. But either way, what a drop on the S&P today. Big drop to the downside. Now, without further delay, I want to get into some of these other charts. First of all, we got to look at the S&P. I highlighted this yesterday to you guys, and I said, this is interesting. Look at this parallel channel, right? So we have a beautiful parallel channel, and it starts back in October of 2023. And basically, you all along here, you were just up against it. You then pulled back, retested it here, all along here, and then you broke down. And I told you yesterday, the breakdown on this coincided with the equal weight and the S&P diverging, right? Because soon it was like the equal weight was getting weak, but then the big cap, mega cap techs, they just took off and took the market with it. But look at how we came up here under the underbelly of this channel, tagged it right here, and as of yesterday, we tagged it right there. So what do we see today? We see a reversal candle, which is a bearish reversal candle on the S&P 500. Now, is this for sure a top in the market? No, we don't know. No one knows really. But does it still pique my interest that it's coming with a reversal candle off of this trend line, and every time we've had this little downtick right here? Yeah, I mean, in the very least, you probably do see some sort of mediocre pullback. The bigger question will be is, does it turn out to be something bigger? And again, time will tell, essentially. So that was interesting from yesterday, and today, that nice little sell-off on the S&P 500. Another thing, take a look at Nvidia. Nvidia down 5.5% today. That's a pretty big move, especially considering it's a almost $5 trillion company. But what did I show you guys yesterday in trading the close? I showed you how the chart replication. So basically, if you go back to this period, this was the last period right here where Nvidia topped, had a 21% correction from this high right down here. And I was showing you guys yesterday how the pattern replication was almost identical to what we were doing here. And I'll zoom in because I know there's some newer people that are just tuning in today, and I always want people to feel like they fully understand trading the close and what's going on here. So I'm zooming in here, needless to say, so we can really see this was the beginning point. We had a reversal candle, confirmation of it, which is that secondary down move. We then got the bounce, a pullback, made a higher low. So you have the higher low. And then we went up. We didn't take out this high, but we retraced a bunch of it. And then look at the drop that we saw after that. Okay, so remember that. Remember that pattern formation. Let's zoom to the current period here. Let's bring us all the way over here. Here's your current chart. What do we have here? All right, here's your reversal candle right here. Here's your confirming move right there. You have your bounce, your retrace, higher low, your rally up, almost getting back to those highs, and then boom. And so the idea here is that patterns generally repeat time after time because, again, as I said yesterday, humans are trading this, and humans tend to repeat, right? We're ruled by emotion, greed, fear, and everything in between, and we tend to trade emotionally. Everyone's emotional. Listen, you can try to tame it. I do my best to tame it. It helps me trade better, but still, it's still very, very hard to tame emotion. The idea is if people are trading, they tend to repeat. That's why technical analysis works, why patterns repeat. Why does a bear flag tend to work, right? Why is this pattern, if you looked at 100 of these, why does 80 of them go to the downside? Well, because humans tend to just act the same way. There's something about it inbred within us that causes this to happen where we start to sell after that price action, okay? So just some key little tidbits there. Let's go to Tesla. Look at Tesla today. Big drop on Tesla. That's still Nvidia. There we go. Look at this. So number one, where did Tesla top out? Double top, right? There's your pivot high. You have this huge pattern here, and it topped out right there. So that's first and foremost, technical resistance right there. Number two, look at the drop on Tesla today. It engulfed 1, 2, 3, 4 up days. So as a power, and if you look at the volume today, it was a huge volume today. But the key is that until proven otherwise, this is a short-term top in Tesla. Now, there are buying opportunities, right? So one of the things I like to do here is I like to say, okay, well, this is a gap fill here, so there's going to be a level here. Here's another gap fill. But remember, just because you have a gap fill, which is technical support, it doesn't necessarily mean I want to be a buyer there. I want at least two factors. Factors are everything, guys. One factor gets you slightly better than 50% odds. Okay, that's good. You win, let's say, a few times more. Out of every 100, maybe you win 53, 55 times. It's okay. But what I want to do is I want to get my win rate to 70%, 80%. And to do that, you need to find additional factors. So I want to show you guys something. So we're going to take those lines off. I'm going to do a Fibonacci retrace. Check this out, guys. If we take the low of this move and we do a fib and we bring it right up here, This is again, and I just want to show you, I'm going to put those lines back on. There we go. So if we take this low right here, which was the beginning of the bull move, and we go right to the high right there, that's why that line goes there, we look at our Fibonacci retraces. Well, what do we have? 382 Fibonacci aligns perfectly with this gap fill right there. For me, I say to myself, maybe this is a day tradable opportunity. Now, it's not a big enough pullback for me to go buy and hold, right, or buy and swing trade. But still, it's a good retrace. Next, I look at my next gap fill. It's right by the 618. Okay, now we're talking maybe a swing trade long. You get a big enough pullback into this level, maybe we get a multi-day, maybe even a multi-week bounce on it. So that's just some insights into how I choose levels. I look at multiple things. And by the way, I could sit down and break this chart down even more, probably find other technical trend lines that might even give me additional factors. But right there, coming up with two that align with those key gap fills, it makes me feel pretty good about a trade at those levels. All right, Bitcoin today. Now, Bitcoin, listen, it really didn't do a whole lot. Again, it tried to push up and it got pushed down. One of the things to just keep in mind, if this keeps happening, the bears are going to take over. So it keeps on, the bulls keep on trying to push it up, and the bears by the end of the day have won the day. That's okay as long as the bulls win it on the third time. So tomorrow is very pivotal, in my opinion, for Bitcoin. If it can't move up tomorrow, then I would be worried about a move down here and potentially a move to 49,000. Okay, if it can, then I still think there's a lot of resistance at 60 to 61,000 on the charts. If we go to gold, beautiful move today, guys. I'm glad I stopped out of my short on this for just a 0.74% loss, less than a percent, because again, the chart told me to do that, and that's so important here. So I had the confirming move, we waited for the retrace, and off to the races it goes. You now have what I would consider to be a bullish pattern, right? You have this move up, and then this is all sideways consolidation, and you got to assume that maybe it pulls back a little bit more here, but ultimately it's probably going higher. 2,500. If you go back to interviews that I did with like David Lynn or something at the start of the year, I was asked, what's your end of year price target? And by the way, at the time it was around $2,000, hadn't even broken out above the all-time highs on gold. And I said, 2,500, it's going there. People laughed at me, they always do. That's okay, it usually means I'm right. And sure enough, we've already gotten in the 2,400 level here. And again, this is a macro play, looking at the big picture that is now coming to fruition. Silver today, nice little move. Notice the silver move today wasn't as big as gold, because remember, silver is also an industrial metal. But either way, it's still heading right back up towards 32.50. That will be short-term resistance. Oil today eked out a little bit of a gain. Decent little move up. We are still stuck below this level. I'm still in the camp, and I could be wrong, I'm still in the camp that we will see eventually a move like this. And so a little bit of a bounce, eventually rejected. The thesis, again, for why oil is going lower is macro, right? It's really, it has nothing to do with the shorter term. And listen, there could always be another war in the Middle East or something like that that causes a short-term spike. But ultimately, the U.S. is slowing. There's no doubt about it. I mean, even Jerome Powell in his testimony said the jobs market's a very big concern to him. It's slowing, and they see that already. China's still stalled out. Europe's kind of doing iffy right now. So all of these do point, in my opinion, to a lower oil price. Lastly, natural gas. Natural gas continues to break down. This was a short-term minor support. The big support is right here at around 215. Looks like it's going there, maybe as early as tomorrow or Monday. I will be contemplating a long trade if it gets into that level. Not saying I'll do it, but at least I'll analyze it and make that game time decision at that point in time. All right, guys, I got to get going. This was a busy day. Tomorrow's Friday, game plan 9 a.m. You guys know it. And don't forget, there's Investor Empowerment Day on Monday. I'm going to be trading right here live. You'll see me with my 3-screen setup. Now, usually I trade off of 6 to 8 screens, but we're going to be doing it in studio. I'll actually have my laptop with additional screens. We'll have to make do. But the point is, I'll be trading live, headset on, with the live trading room. You can tune in and watch. You can actually even ask questions. Remember, it's only going to be on Verified Investing's homepage. So you're going to have to come to the website to watch it live and ask questions. But I'm going to be here rocking it with you guys, trading the market live. Hopefully it's a great event, but the key is Investor Empowerment Day is where I'm trying to make Verified Investing the bridge between institutional knowledge and institutional maneuvering and data and retail investors. I want you guys to have that same sort of thing. That's the way it should be, right? you guys should have the same knowledge, the same information. There should be no classes in investing. Everyone should get the same stuff. So that's what we're here to do at Verified Investing, and be ready for Investor Empowerment Day on Monday. You guys have a great one. I'll see you soon.